What is up, everyone? I'm going to be backtesting early today. It's only about 5:30 Eastern, and I need to um, essentially finish everything up earlier today because my family's going out to eat for my sister's birthday, and so I'm having to do everything a little earlier. So if you're watching this later after it came out, that's why I did it early today. Not because I'm switching anything up, but because I had to, right? So let's go ahead and start reviewing price action, and then I'll just review everything, get a good idea of what happened, and then we'll make the market recap. We'll also take a look at Twitter. I don't need to put anything in my journal today because, well, I didn't take a trade. I just watched, and there were a couple things I liked, but nothing I liked quite good enough, which is exactly how I want to trade. We got a trade from Diego, entered off a 1 minute inversion. I saw this. I don't think we actually inversed this on that candle, so that's a little questionable. But we inversed it and then we retested the gap, so that's valid, but I don't know why he entered right here. But anyway, interesting observation. Let's see. See what JCap said. So we could probably learn something from this. So JCap took a long. I don't even know what his entry was here, but yeah, I don't really care. If he's not showing it, then he's not showing it. Let's scroll down, scroll down. Actually, I want to make sure my mic is correct because sometimes I forget to switch it back. Yeah, it is. Okay. Okay. Dino up 100,000 on the day. What did he do here? He just took a inversion. I think took this. Oh, I think this is the same exact play as Diego. So we could definitely learn from that one. And we got a trade from Amos. Once again, his little accumulation, manipulation, order block deal. Nice. And then yeah, JCap. I don't know what JCap did here. JCap is so interesting. Like he's able to pyramid up. I mean that's that's a skilled trader right there. Someone who has so much conviction in their trade, they are able to pyramid up like that. And then Hydra took a loss. What the heck? Why did my timeline crash? What the heck? What is going on? My timeline crashed. OBS is still running, but my timeline crashed. That was weird. Okay. yeah, I think we basically covered everyone's trades. What up, Kirk? So, like I said, I need to do back testing earlier today because my sister's or my family's going out to eat for my sister's birthday. So I got to do everything a little earlier. So I'm gonna make the recap a little earlier. Bruh, T Trades thinks he's the guy. He's the goat for marking out a 2022 gap, bro. No, I don't know, man. I don't know what I have against T Trades. It's just like stuff that he says is just like, I don't know, man. There's stuff that I just disagree with. But yeah, it looks like Dodgy took the exact same. Wow, everyone took this exact same trade. Definitely a lot to learn from here. So, once again, though, you'd have to enter on that candle. That's just, the RR is just booty. Like, this is not even a trade that comes to mind for me because of how weird it looks. But I mean, a lot of people liked it and took it. If I was to take this, I would definitely take this on a Jan entry because, man, the RR is not worth it for me. But hey, it played out for a lot of people, so nice. Played out for Camel and all these guys. Anyway, guys, let's go ahead. We basically reviewed everything. So let's go ahead and now let's look at the market for ourselves and talk about what happened from our point of view, or at least my point of view, right? And then also you guys let me know what you guys are thinking as well. So what I saw for the day is, first of all, we have been delivering from this daily gap. So this is like the higher time frame idea is this daily gap has been holding price higher. And we can actually, see this is a likely gap to hold because it's just, it comes with expansion and displacement, right? So the gap is likely to hold is my point because we're expanding higher. And it's, you can kind of combine these two gaps as well. Like this whole thing is a daily gap. Yeah. So that's the first thing I'm going to note, that this is likely to hold because of displacement. And then note the volume imbalance at the bottom here, the daily volume imbalance. Once again, whenever you have a volume balance at the bottom of a fair value gap, that volume balance is going to be very sensitive, as I always say, and you can see that's exactly what happens. Right. Actually, it's not just a volume balance. It's also a new day opening gap. But once again, the daily charts gaps are slightly different than the actual new day opening gap. They're like an hour difference. So to get displacement, daily fair value gap here, and then end dog. So daily fair value gap, end dog. And I'm going to put in parentheses backboard because, once again, volume imbalances below gap, super sensitive, right? So let's go ahead and put this as a higher time frame note. Daily fair value gap with displacement above an old high was likely to hold. Snipping tool. Okay. So what is this, Monday? Yeah, 9/22. So as we said before, right, we can essentially frame this whole thing as a buy model, where this is the daily gap, and then 1 hour change in state. This is what I've been looking at now for a while, and second standard deviation got hit almost perfectly. So I'm still anticipating expansion to the fourth standard deviation, probably, but I guess we'll just have to see. And I think we had S&T with the low. We had S&T with this low, which was low of the week. So that's essentially what we had going on here, right? On the higher time frame is liquidity sweep. So yeah, partial previous week's low S&T. Let's just mark it as a regular S&T because I don't want to have to deal with that. So yeah, here's our buy model. So, okay, from here, right? We can frame this as a buy model. So, oh my gosh. No, it's not what I wanted to do. Once again, let's measure out standard deviations of the bodies. So yeah, second was here, and now maybe fourth. So let's screenshot this. Possible higher time frame model. So then let's talk about what actually happened for the day. So going into the morning, we had this 1 hour gap. As I said, kind of initially, I talked about this in the morning, and it was nice because now I wasn't necessarily sure, like, I guess it's the most obvious. This was definitely the most obvious thing on the chart, right? Just a very obvious 1 hour for value gap. So there shouldn't have been much to it. It should have just been, okay, 1 hour for value gap. But I was considering another possibility of being bearish, where if we had a rejection of that gap or something. I don't know. There was definitely, like, I was keeping my options open. So 1 hour for value gap, which also retraced back to the midpoint of this. See that? So yeah, you can clearly see this was a model on the 1 hour lining with like the 5 minute or something. As I suspected, this 5 minute down close candle was going to be the change in state, and it's exactly as I thought, right? it played out exactly as I thought. This 5-minute candle ended up being essentially the change in state of delivery. Now, I want to talk about the S&Ts because those ended up being very, very important, right? We had, let's actually get rid of everything real quick. We had, hang on a second. Kind of itchy. So yeah, we had those double stacked sequential SMTs, I'm pretty sure, right, where we had, we were below 730. Wow, that was, I believe that was, wait, let's actually, oh, okay, 730 was right here. Yeah, we manipulate 730. Look at midnight. Look at the way we come down and then we used midnight again. Fascinating stuff, guys. Yeah, that's what I was telling Javier. It's like there was no reason to be bearish when we hadn't taken midnight, and then we ended up delivering higher and then retesting midnight. So yeah, I think it was SMT with this low. So yeah, 6 o'clock to 7:30. So this was the 90-minute SMT right here. And then this was the 6-hour SMT. I mean, this was really, really nice. And then we also had a partial previous day's low SMT with this low. So you can kind of see how these SMTs all played together here. And then we deliver higher. And yeah, this is something I realized, right? Triple stacked SMTs. I guess I'll just call it stacked sequential SMTs. And then yeah, I should have been more aware of the possibility that once we broke this high, that this fair value gap was likely to hold, right? Lesson learned for the future. Stacked sequential S&Ts were super nice. Well, yeah, I'll just leave it there. So then, right, we end up getting this fair value gap. Nice little 2022 model. If you can't see it, let me show you. I guess we either sweep out this low or this low. I guess to me this is the obvious sweep. So sweep. And then break of structure right here. And then fair value gap forms and then we right here, and then we come down to equilibrium. And we had already manipulated our true session open, and we were definitely below the true day open. So, you know, everything just lined up. It makes a lot of sense why it happened the way that it did. manipulation here. And then, right, there's our 2022 gap. Liquidity sweep, break of structure on the 5 minute. And then, yeah, should have been more obvious here that we were going to expand off of equilibrium. Whatever. Now I know for the future, like, pay attention to this, guys. When we have stacked sequential SMTs, lock in, because that fair value gap, it's actually, there's a term for it. It's called SMTF or FVG SMT, or wait. I don't remember what it's called, but I only heard about it once, but I know what it means. And it's basically the 2022 model that forms after sequential SMT. That's going to be a really high probability gap. I think it's called SMTF or F. Yeah, it might be called SMTF or maybe FVGS, or I don't know. But it doesn't matter. Quarterly theory guys are going to gatekeep the technical name. I don't really care. I know what it is, right? It's when you have a fair value gap for the 2022 model that forms after stacked sequential SMTs, right? So SMTF or something. Point is, fair value gap after stacked sequential SMTs is going to be very nice for the 2022 model after stacked sequential SMTs is going to be very nice. Yo, what up, Gary? Look at these SMTs, bro. 3 stacked SMTs, and 2 of them were perfectly sequential SMTs. I didn't catch anything. I didn't take a trade. Reason being is I had not seen these SMTs. At least I didn't see that they were sequential. If I had seen all of these SMTs and the fact that they were perfectly time-based SMTs, then yeah, this is very, very obvious. And I just didn't see that. And, you know, on to tomorrow, right? We're going to keep getting better and keep locking in. But you can kind of just tell, like, as well, that, you know, what was once high resistance liquidity, you can see how this looked high resistance initially. Here, let's actually draw this out, because this is important. Actually, first let's screenshot this. And then I'll show you guys how to tell when the high resistance liquidity is not going to be influencing price anymore, right? So how are you going to make sure you see it next time? I think the main thing is, that's a really good question, because that really is the key, right? That really is the key. I think the main thing is, I had to see these SMTs sooner, and then, you know, if I'd seen these SMTs sooner, then I would have had the conviction to actually take this 2022 model with entering. I would have liked to have entered at equilibrium, right? I'll think about that, Gary. That's a good question, but obviously we can catch it. It's just a matter of, you know, refining things, and we're gonna get there. So, okay, let me put this in my notes real quick, and then I want to talk about how you can tell that the high resistance liquidity isn't influencing price anymore. So, stacked SMTs, stacked sequential SMTs, and a 2022 for value gap. But it's also important to know that if something's not perfectly obvious and you're not 100% sure, that you need, like, it's okay to not take something, right? That's important to recognize as well. Like, we don't have to feel bad about not taking a trade if we're not sure. It's okay to pass up on things. But now we know, going into the future, like, pay more attention to these SMTs and then the 2022 model that will form after the SMTs. So yeah, stacked sequential SMTs and 2022 for value gap. No, I'm going to say stacked sequential SMTs makes the 2022 model very nice. Okay, so to go back to what I was saying. So, right, all throughout here, you can see how this is high resistance, right? Every time we push up against this curve, the market is essentially denying us, right? Denied, denied, denied. High resistance, high resistance, high resistance. This is why break of structure is so important. Because the break of structure essentially is confirming, like, yo, the low resistance liquidity run is starting, right? Break of structure essentially switches high resistance liquidity to a low resistance liquidity. So yeah. But I'm going to think about your question a little bit more because, it's a hard question. Like, how do I make sure that I catch it? But yeah, once again, high resistance all through here. And at this point, we break structure. Now this is all going to be low resistance. High resistance, turns, low resistance after we break structure. So hopefully that makes sense. But anyway, these SMTs really should have gave me conviction. And then, guys, just having a sniper entry at equilibrium a lot of the time, that's the move. It's that simple. Just take a sniper entry at equilibrium of the displacement. And you can get really high RR off of that. So, okay. Gary, did you catch it? So I like it like this, where we enter equilibrium, and then I would target these low resistance highs up here. This is really, really obvious low resistance liquidity, and then I'd take profit at the end of that. That's crazy RR. That's 7R. Super, super beautiful. All right, let's try and calculate it. So this is 8. 1 8 32 96. Wait, why is my phone buzzing? Yeah. Okay. 1 8 32 96. That's, if you guys don't know what I'm doing. To be honest, I don't trade NQ. Low-key just here for support. My specialty is EU. Nice. So you didn't. Okay, you're just taking a trade on something else. That's sick. Did you catch a trade today? But yeah, what I was doing right there is I was calculating my risk and converting it to the other accounts, and I've been practicing that for the past couple days because that's important for me to get better at that. But yeah, found your channel one day and you seem cool. Excited for your development as a trader. Thanks, Gary. That actually means a lot to me. But yeah, you could have entered at equilibrium. It's also reasonable to have entered like a consequent encroachment or the top of the fair value gap. All of those were kind of like valid versions of this trade. I'm going to mark out specifically the entering at equilibrium version though. No news Monday equal no trade. It's up to, for me. What I would say is, if from your back testing, you've observed good trades on No News Mondays, and you can find one that you have conviction in, then that's, between you and your back testing, and then you and the charts. For me, I've found trades on No News Mondays, and it aligns with my back testing to possibly have a setup on a No News Monday. So once again, you just gotta have conviction in what makes sense to you. You can't really go off of anything else except for that. I mean, your own back testing and your own time with the charts is gonna tell you more than anyone else. So, but if that's what you found is like No News Mondays don't really work for you, and then that's exactly what you should do. So this is 9 o'clock, 2022 model, 5 minute. Yeah, personal journey. Exactly. And then another one here. Let's just mark this another version of this out where we enter at consequent encroachment. Now, obviously, guys, I'm scaling out, of course, as, it's never all or nothing, right? But I just want to show the final TP. 9 o'clock, 2022 model, 5 minute, version number 2. Why is my phone going crazy? Alright. Put it on Do Not Disturb. Sorry about that, guys. Just tripped on my chair. Back to what I was saying. So yeah, there's a lot of different ways to take the same trade. Meaning like you could have entered at the top, the midpoint, the bottom, equilibrium. It doesn't really matter. It's still the same trade. So yeah, 9 o'clock 2022 model. And then number 2. And then there's the version of it where, let's say you just want to wait for extra conviction. You take this 5 minute. Oh, I marked it as a 1 minute gap. It's not a 1 minute gap. Okay, real quick, I'm going to re-screenshot it. Yeah, okay. But what I was saying, so let's say you wanted to get extra conviction, like you could, I think equilibrium entry is really, really nice, but if you wanted to be extra patient, drop down to the 30-second, which is the aligned time frame with the 5 minute here, and then you can see that we get 30-second change in state, and theoretically one could take this, but I wouldn't. Personally, I wouldn't, because price action is not obvious. It's not obvious to me. It's right before market open, so personally I wouldn't. But I will mark it up because it's what happened in the charts, and I think it's valuable to mark things up because the market's always right. So 30-second change in state did deliver price higher, so theoretically, had you have waited for a change in state of delivery, entering on a retest or a close, that could have been fine. But once again, it's not my favorite thing in the world in this specific situation, just because it's not obvious at all. But let's say you took it like that, right? I would definitely have stop loss at the bottom of the order block here, because the bodies here, because if we dip down that far, I would just expect it to fail. So, and then honestly, you could go like this, and then honestly, I would just target the top of the low resistance liquidity here. and that is 4.1 R. Practice test 1.1. 1, 11, 44, 132. I'm good at 11, bro. Once again, guys, if you have no idea what I just did, that's me calculating my risk and converting it to the different accounts because they all have different size. I probably look crazy when I do that, but like, I don't know. It's good to practice. Okay. And then, yeah, we finish. We run all that LRLR. Cool. All right, here we go. So this is kind of how I would take this 2022 plus. Once again, 2022 plus meaning waiting for an aligned time frame change and stay off of the 2022 gap. Now, I like I said, I probably wouldn't take this because it's not obvious enough to me. 907. It was, no, it was after the macro. 5 minute, 30-second. Okay. And then past that, guys, it gets very tricky real fast because we just start expanding. The low resistance liquidity run officially begins, right? And when this is occurring, when we're expanding so super aggressively like this, it's like, okay, how are we even going to get in? Because, you know, I don't even know. Like, once market opens, clearly we go higher. Now, there was that 15-minute IPG. I did like that a lot. Part of me thinks maybe I should have just taken that. No one else talked about this, but I liked it. Where, you know, there's this old gap right here, and it gets inversed on this candle. So, I mean, I don't mind it at all because we have really obvious low resistance highs and triple stacked sequential SMTs. Triple stacked SMTs. So, time-based SMTs. So it's just a high conviction inversion in my opinion. So I really don't mind this 15-minute. And I was considering it, right? I was considering it. And honestly, guys, you know, this is one where if the market's going to expand, it should expand right away, so you could have a tighter stop if you want. Just kind of depends what you want to do. That's 2.7 R. So this is a 15-minute inversion for value gap. Once again, no one else talked about this one except for me. I don't know why. Maybe it's not that obvious for other people, but I liked it. And then if you held it up even higher, you know, obviously you would have printed, but 9:30, 15-minute IPG. And what else? Yeah, 15-minute inversion. I guess. What else was I thinking? Oh yeah, there was another inversion, the one that everyone else took. Everyone and their mom took the inversion up here where we had a 5-minute gap. So everyone took this. And, you know, it's fair because very obvious low resistance liquidity above, right? It's just not a high... It wasn't a high conviction trade for me. That's all I have... That's the only thing I need to be able to say I didn't want to take it because, you know, for other people, fine, maybe it's high conviction. I just didn't see it as high conviction. Because... I don't know. And maybe in hindsight, it is not bad, and maybe I should have taken it. And it's just gonna go in my mental notes of like, you know what? Now I know. So, lesson learned. This was a good trade. We had an inversion for value gap. I usually don't take trades where we hesitate and then we get another close up, but in hindsight, now that I'm looking at it more, uh, it actually does seem a little obvious that we should have gone up to that LRLR, especially if you have a wide stop loss just targeting 1-to-1, like something like this. When you look at it like that, it actually makes a lot of sense that we would continue higher. Then again, though, I'm not gonna lie, guys. Oh wait, not I meant you have to enter on this candle. Then again, though, guys, one thing I will say is here's the issue, right? I could have easily seen high resistance liquidity start to form right here. I think that's the main reason I didn't take it. Because I was like, well, what if we start to generate liquidity, push down, and then go higher later? But it was going into 10 a.m., so, there's always pros and cons. For me, it wasn't obvious enough. Maybe in the future it will be, but as of right now, I kind of stand by what I said, and I don't regret not taking it. But maybe if I saw this in the future, I would consider taking it. But still, not really my big, I'm not a huge, I don't know, it's just not my super style. But also keep in mind, higher time frame bias, right? We already had a 15-minute inversion for value gap with triple stacked S&Ts. So even though this isn't my favorite IPG in the world, it gets the job done. And sometimes that's really all you want to do is just make the money. So yeah, I guess we'll mark it out, right? 1 minute inversion for value gap off of this 5-minute gap. And essentially the main reason I like this is because of bias. Other than that, it didn't stand out to me, but now in hindsight it does. Right, so there we go. 944 IPG on the 1 minute. A lot of people took that one. Yeah, once again, this is still Monday. And then I probably have to film the market recap kind of soon, but it's okay. And then we ended up new day opening gap, right? Got used here. This was so cool, the way we ended up back testing consequent encroachment, and I was talking about that. What still blows my mind is how do we use an event horizon, like a key level, before it's even formed? I don't know how that's possible. Maybe it was just coincidence. I don't know. First presented for value gap, right? Same thing. First presented for value gap formed right here. It could have been an additional confluence for you to go long off of this. Let's kind of clean up the charts a little bit. We already kind of have that whole idea framed now. Yeah, with the market being very bullish, market open just delivered price towards where it wanted to go. So it makes sense why it happened the way that it did. Not only was this a 15-minute inversion, it's a 15-minute change in state. We had this 1 hour gap. And the market obviously wanted to hold this. Another thing I was thinking about is, with this obviously being a 1 hour for value gap and we rebalanced the discount. We'll just mark out equilibrium here, or discount, or whatever. I was looking for 5-minute change in state here. And, oh my. This actually makes me kind of mad, because in hindsight, this is so stupidly obvious. In hindsight, this is so stupidly obvious. And yeah, with the stacked sequential SMTs, that seals the deal, bro. That should have been this should have been a no-brainer. I wish I could just pause time sometimes, because I don't have enough time to catch everything. But clearly this was a flow state where we have a 6-hour SMT here, 90-minute SMT here. Okay, wait. Dang, man. I wish I could just pause time sometimes. And then we have a liquidity sweep here, below the gap. And then a 5-minute change in state. And that was it. That was all it took. Market went up right after we get this. And then we also have previous day's low SMT. Dude, this actually makes me kind of mad. Like, how do I not see this stuff? You know? Because it is so obvious in hindsight. We just got to keep showing up. That's the main thing, right? We just got to keep showing up. It's all part of the journey. But yeah, in hindsight, this is super obvious. Equilibrium rebalanced. We have a 1-hour gap and then a 5-minute change in state right here. This is the one I'm talking about. Now, maybe you could consider that the change state. I'm not going to consider that the change in state, personally. I'm going to consider this the change in state, because this is the obvious one. So once again, flow state and 2022 model, a lot of time they're going to overlap with each other, and that's just the nature of the fact that they're literally the same, essentially. Not exactly the same, but pretty much. A lot of the time. And then we can measure out this order block or change instead delivery, same thing. And I'd measure it from body to body, 3rd, 4th, 5th, 6th, 7th. Once again, guys, don't ask me why. I've said this a million times, but once again, the 7th standard deviation, it's better than the 8th, bro. I don't know why. The 7th is better than the 8th, and I've seen it happen now so many times where I can say it with conviction, bro. The 7th standard deviation is better than the 8th. It just always is. Unless I'm just like measuring it out badly. But what'd you miss? I was looking to see if this was flow state as well. And it is, right? So this original idea we had was this was the 2022 model, but you can see it was also flow state because we had a 1-hour for value gap and then a 5-minute change in state. And, you know, in hindsight, this is really obvious, and it's unfortunate I didn't see it in the moment, but it's not always easy. And that's why we're going to keep getting better. So it's important to mark out these fair value gaps as well. The 7th is biblical. It's just weird, though. It's kind of weird. And here I don't think I'd put stop loss all the way at the low because, you know, it's a 2022 model. I can just tell where to put the stop loss. And then yeah, you could just target the LRLR. And then once again, you know, if you ended up leaving a runner for the 7th, that would have been a perfect take profit. Once again, body to body. I mean, we end up going up to the 8th anyway, but still, like, I'd rather top tick my take profits. I don't know. I don't know about you guys, but I'd rather hit the take profit right away. Who wouldn't? So yeah, this is just a very simple trade, and so yeah, very simple trade. We obviously had to break a structure too. I think the move here, yeah, probably just target the fourth. Probably just target the fourth. I don't need to go any past that, and you actually get more than 4R because I would just put stop loss there because that's just how far down I think it should be. And yeah, this is just genuinely beautiful. And yeah, LRLR all through here. Actually, let's just mark it out with a dotted line. How long did it take to reach the fourth versus the seventh? Just for your notes. Like about the same. 50 minutes, and then an additional hour after. Okay, let's go ahead and screenshot this. Bro, this looks like this is a machine, guys. You guys can you just not tell that this is a machine? Like this is an algorithm running. I mean, or it might be algorithms, right? Like I always say, I don't know if I believe in the whole one algorithm runs the market. I think it's just, smart money concepts give you edge, and then people code that into algorithms. I don't think it's one. Did I take any of these trades? I didn't take a trade, and, in hindsight, these trades were really obvious, but trading live is so much harder than trading, reviewing the market, and every day we're going to keep getting better. But so what happened was I saw these SMTs a little too late after we already started delivering off of that 2022 gap. And yeah, I just saw it too late. I wish I saw these, because if I had seen these SMTs and then this 2022 gap and I had seen all that by 9 o'clock, then I would have got that entry. So, oh well. So I got to really be on the charts on time is the key. Because I was actually like 10 minutes late or something. So 9 o'clock, low state, retest, 1 hour gap, 5-minute change in state. And I don't have stop loss all the way at the low, which is, once again, that's just what I'd prefer to do in this exact situation. Okay, save. $50, you can see me hyperventilating? What? The heck? Wait, did I include the 7th in it? Yeah, I did. Oh my gosh. Now I'm curious if stat map was used. And I'm not going to have access to stat map in like a month. Or less than that. So, rest in peace stat map for me. But I can't afford to pay for it every month, bro. It's too much. Yeah, we went to the statistical distribution level there. Okay, anyway. I think, yeah, the key was I had to really take action right here. That was the key, because this was the market giving the opportunity. Past that, this is all difficult to get into. The market is saying, you got this opportunity. Now smart money's in, you're going to have a tough time. You got to get in here. Because there were like 3 or 4 opportunities right here. Past that, the market didn't give a ton. There was a few trades, like you could have taken that 15-minute inversion. You could have taken the low time frame inversion that I didn't love, but it ended up being nice. A lot of other people took it. And then, New Day opening gap, sweep here, A, M, D. It's like there's opportunities. It's just they're harder to see. This is the most obvious, cleanest, easiest one to see, and it required being ready right at 9 o'clock. And then past that, it just got more difficult. So, yeah, lesson learned, and we keep going. But SMT giving you bias, guys. Pay attention to those SMTs. They're going to be super helpful, and they're going to tell you exactly where the market wants to go. Now, the other thing I wanted to talk about with this New Day opening gap is, once again, guys, we use this New Day opening gap beautifully. Like, genuinely, I already saved it, actually. Look at this. This was the first trade I recorded of the day. New Day opening gap, dragged over, accumulation, consequent encroachment of the New Day opening gap, tapped, and then I just kind of like this low time frame change of state off of it. Bang. Nice little AMD there. So a cute looking trade right there. I don't know, maybe cute's the wrong word. That's a hot trade, bro. That's a baddie. This is a baddie. This is like this trade's a 10. This trade's a 10 out of 10, bro. Like, this is a hot trade. Like, imagine you take this live on the 15-second chart. This is the type of trade that makes you the greatest trader in the world if you take this live. This is a crazy trade. I aspire to take trades like this one day. You know how cool that'd be? Like, oh yeah, consequent encroachment tapped perfectly. All right, we got a 15-second change state. Bang! You know what I'm saying? Like, most people will not ever see trades like this. But then, like, us, because we do these backtesting sessions, we see things no one else sees because we're willing to put in the work. And look at these equal highs, too. But I love how we tap consequent encroachment there. What else is there, guys? I feel like I already knew about most of the stuff that happened. The first 15-minute fair value gap that, really we got a retracement to, ended up holding price. Same as, like, this is a 5-minute gap. So maybe we'll mark it out as a 5-minute fair value gap. And then yeah, this, once again, guys, super obvious in hindsight. And these are the kinds of trades I prefer when, once again, it felt like when we were over here, we had not consolidated enough. So that's why I didn't like this inversion. I much prefer to take trades after we have that consolidation and then final purge of the low where it's obvious that, stop losses were taken. Those are the kinds of trades I like. And so I guess you could say it wasn't my style. I guess you could say there's other reasons. But once again, the main thing is it just not my style, honestly. So then we end up getting SMT with that low. And so this one not the most obvious because I don't know. I guess actually it's not bad. It's not bad, but I don't know. I don't know for sure if I would see it, is what I'm trying to say. But let's mark it out anyway. S&T. It's always way easier in hindsight. 5-minute gap or a 15-minute gap, whichever you want. And then 30-second change in state. and, accumulation, manipulation, I wonder if we use the true open. 10:30, 10:52. Okay, no obvious true open, in my opinion. Accumulation, manipulation, (30-second) change in state. Once again, it's always easier in hindsight. I wish it wasn't, but it just is. And then, equal lows are a distraction here because, wrong side of the curve, bro. Wrong side of the curve. I don't care if there's equal lows there. You know what I mean? Like, equal lows are like L or LR. They're helpful when they're on the right side of the curve. When they're not, it's honestly like, a distraction a little bit. I don't know how else to explain it other than that. And then obviously this was an inducement here, right? Inducement of this low. So this would have been a really high probability entry to take it as an inducement here. But not an easy trade, once again. These trades are never easy. But, like, this is what I mean when I say one good trade. Honestly, one good trade can make your year. If you can just take one good trade like this, it can make your year. Your trading year, or trading month, or trading, like, it'll flip your whole trading month, week, year, all around, just because one good trade can benefit you so much. Like, it's crazy, but it's not easy. That's why it's all about risk management. So yeah, accumulation, manipulation, inducement. Let's measure out the order block. Okay, this one actually did go to the 8th, so might have to retract my statement about the 7th not being good because the 8th ended up being pretty nice here. But once again, if you're taking that profit the 7th, there was no harm done. You still would have got 7R. You know what I'm saying? But man, the 8th would have been kind of cool too. They both would have been cool. I'm going to just mark out the 8th because, I don't know, it's kind of fun to show how you could have traded it perfectly, right? This is 8th top ticks it. And then yeah, that's basically how this ended up playing out, right? 30-second change in state, inducement, the low, manipulation, SMT, and then yeah, you can just enter as a inducement, or you could just enter right away, but that's going to be lower probability. You know what I mean? It's always better to enter as an inducement. And then I put stop loss at the end of the order block body. And yeah, like I always say, easy? No. Possible? Yes. All right, let's do the calculation. How long did it take to get to the 8th from your entry? We'll look at that in just a second. But let's calculate first. 1.3. 1, 13, 52, 156. All right, was that right? 52 was right. 156 right. Okay, so that one was kind of more difficult because it's 13, but we're getting there. How long did it take? 18 minutes. What's kind of cool though is this does occur during the lunch macro. And once again, I like to mark out macros from when the entry is. So from here to here, personally, is when I would mark out macro. So we go a little bit past the macro. Oh, I wonder if we hit the 4th standard deviation right at the macro. Or right at the end. Oh my gosh, bro. We're gonna have to record 2 different versions of this trade because it's just that cool. That's just holy. Okay, first we'll mark out the 1 to the 4th because pay attention to when. When do we hit the 4th standard deviation? Oh, this one might be a little. This one might even be more of a baddie than the last one. This one might be an 11. I might be corrected, guys. Oh my gosh. How does it know? How does it know that right as it hits the draw on liquidity that it was exactly the 4th standard deviation? Because how does it know that? Bro. Could you imagine just being like, alright, 1 more minute. Alright, right on time. 4th standard deviation, baby. Imagine they called that live. You know, one day, I kid you not, like I'm going to do that live. I hope we all go crazy. I hope we all go crazy in the chat. You know how cool that would be? I'm being honest, man. None of this matters unless you can do it in real time. That's why we have to get better. That's so obvious, bro. And we will get there. That's why we practice every single day. And I did it in real time twice last week on Friday or Thursday. I don't know what the point of D-Trader. I don't know what the point of you saying that is. That's like that's like saying shooting free throws in basketball is pointless because it's not during a real game. Like bro, it's all chart time. It adds up. I mean, that's just, I don't know. That's just ridiculous to me. Yeah, it's hindsight. Hindsight is how you learn. How else are you going to learn? Obviously forward testing, but I do that too. That's why I show up to my live trading window every session. So yeah, we're working on it. We're getting better. Alright, guys. I think I need to probably film it soon. But first, let's screenshot this. $11.56. Flow state. I'm going to call this a flow state inducement because I'm entering via an inducement. And then 5 minute, 30-second. And I did take 2 perfect entries on Friday, or maybe it was Thursday, or maybe it was, I can't remember what day it was, but I hit 2 perfect entries, so, I mean, I've already showed proof of concept. Like 0 drawdown, exactly like this. I hit 2 of them, but I just tape read them. Yeah, 11.56 full state inducement. Catch one of these live is a really good accomplishment. I caught 2 on Friday, bro. I caught 2 on Friday. D Trader, bro. I've look at this. I just gotta show you because like I just want to prove a point. Yo, there's 6 watching. That's pretty good. Right? I did this twice.
So
2 perfect entries on Friday. First one was right here. Okay.
marked out as the 1 minute breaker, but once again, I think this was more obviously a 1 minute gap.
Watch this. This is so sick. So this one was the first perfect.
This is just a thought.
entry.
Like, what if we induce this high and then go lower?
Now, I didn't take it live. It was tape read, but still proof of concept.
Once again, this was a really obvious change of state delivery, right? And we had an old high that was perfectly placed there. So it just looked obvious to me. Check this out. Once again, framing out that we had higher perfect finally in line to high.
Right? That was the first one.
That first standard deviation, second standard deviation, third standard deviation, and then finally that 4th standard deviation.
So this was literally Friday. So the trading session before today's, right? I did this on Friday perfectly, right? And then I did it again. The same session, I hit another 4-to-1 tape read. I did it again, right? Watch this. I think I cover it later. Here.
S&T at the highs. So this week, I would enter here. So I enter 32, and then I enter 1 micro, and then on Apex, I put a limit order, let's say.
Yeah, watch this one too.
For 96.
No drawdown
So
on this one
times.
either.
That. See, this is. We end up
And
delivering.
this one did end up hitting TP, but I ran out of time in the live stream. I ended the live stream. So, yeah, crazy. 2 trades, 4-to-1, 0 drawdown. I mean, that's the thing. It's just like it's just it's gonna take time because I only allow myself 1 loss a day. That's the thing. Because that's just I'm in this for the long run, bro. Like a lot of people, you know, like they don't understand that the logic here is, you know, it's preventing losses and maximizing upside every single day. And I don't want to personally go over more than 1 loss a day because that's just my own. Like on days where I'm having a good day, I want to have unlimited break evens and wins. But then on days where I have a bad day, I just want to be done and stop those losses as soon as possible, because if I'm having a bad day, the worst case scenario, I imagine myself as a future profitable trader, the biggest threat to your success as a long-term trader is having 1 bad day that ruins everything, right? So if I can just get into my mind now that when I lose, I'm done, but then when I win and I get break evens, I can keep going, that's going to lead to incredible long-term success. And I think that's one of the biggest, most important parts of long-term trading success that no one talks about, right? Okay, back to what I was saying. So anyway, we hit the 4th and then up to the 8th. Very cool. Let's practice 1.3 again. 1, 13, 52, 156. Bang. That one was right. Once again, that's me practicing calculating my risk in my head for the different accounts. Okay, guys, I think I'm going to film the market recap because, you know, I just got to get moving on with it. So, because I have to, once again, if you guys weren't here for the beginning of the stream, I had to do this early today because my family's going to eat dinner, so, and they want me to come. Right. Or actually, we'll very briefly look at the afternoon, and then after that, we'll be done. $11.56 flow state inducement, 5 minute 30 second, and then this is a version where you take it to the eighth standard deviation instead. Alright. Okay. So yeah, once again, when we finally retest the fair value gap, that first fair value gap, when we're expanding up, also holds price to deliver it higher. So same thing here happened, where we had a fair value gap finally get tested again, but it was short-lived before we continued. 5-minute fair value gap got hit, but we're so bullish that instantly we kept going higher. So then let's go to the 30-second, which is the aligned time frame. Bro, this is just, it's literally a money printer. Oh my. Accumulation. Right? We manipulate the low into the gap. Now, is it easy to catch these? No, it's not. And I have to be watching price constantly in order to catch it. That's the other issue, you know? And then, this one is kind of interesting because we get change in state here. This, you would need to have stop loss at the low. If you had stop loss at the end of the order block, you would not. You would get stopped out there. So same thing here. I still like measuring standard deviations out like this. But yeah, this one right here is the sniper entry. Yeah, this one's tricky. You'd have to have stop loss at the low. So let's say you did that. Let's just say you took it like this. Like a conservative, reasonable person would. Then, yeah, this is a pretty safe way to take this. Fourth standard deviation. Wow, 1310 to 1340 macro did nothing. Once again, if it's not paired with AMD, the macro is not going to do anything. We could look to see if this was in a gold block range. You guys want to? We should probably get going, bro. I should probably get going. Yeah, I don't think there's going to be much more opportunity within here. But let's just see if this was in a gold block range. If it was, that'd be insane. Oh, wow. It was. That's crazy, dude. Liquidity sweep into the low of the dealing range. Fair value gap, partition perfectly hit to the high of the dealing range. That's nuts. And also volume imbalance in the fair value gap partition. That's nuts. See that volume imbalance? So we swept liquidity into the low of the dealing range. Here's the fair value gap partition. Here's the volume imbalance. Perfectly in the fair value gap partition. And then we go to the high of the dealing range. That's crazy. Once again, it's not, it's all about, you gotta read it correctly, right? Okay, 30-second change in state. Sometimes I can just tell when there's probably a gold block range that's gonna work, Same thing here. Oh, I actually want to, real quick, I want to see if there was a propulsion block today, because today would be the type of day for there to be a propulsion block. Oh my gosh, I don't have time to do that though. Wait, maybe I do. Let's just go. Let's do it real quick. Was there a propulsion block today? I'm not gonna lie. This type of action makes me feel like it had to be propulsion block, bro. This is the type of action that's like screaming propulsion block. Because it literally pushes down, and then we expand like crazy. This is gotta be propulsion. Of course it is, bro. Of course it is. It's a 3-minute propulsion block, bro. Of course it is. Of course. Dude, of course it's a propulsion block. I'm not surprised at all, bro. Oh my gosh. We should have seen this. We should have seen this, guys. This is a stupidly obvious propulsion block. And it came with those stacked S&Ts. This was like the market handing us a $1 million on a silver platter. Maybe not $1 million, but you get what I'm saying. Like, this was the market handing it to us on a silver platter, and we missed it. We missed it. What I'm talking about is we had an order block, very obvious order block, and then an order block coming off of an order block, which is a propulsion block, right? So order block on the 3-minute, and then a propulsion block on the 3-minute. Oh my, bro, how did I miss this? I mean, now then again, like, it's always harder live. It's always harder live, but still, right? Oh my gosh. So now OB, PB. Once again, order block coming off of an order block. And then we had double S&T here. London 6-hour S&T. And then we had 90-minute S&T. This is a incredibly high conviction trade. And so then at that point, you take 15-second change in state off of this. Wow, that's the trade of the day right there. That's the trade of the day. Stacked sequential S&Ts, and then 15-second propulsion block, change state delivery off of propulsion block. Oh my gosh, yeah. Or actually, I like 30-second better here. Oh, nope, I like 1 minute better. Yeah, right here. That's where it's obvious to me. Now, I don't know if I would catch that, to be honest. Okay, maybe the 2 minute. Maybe I need to take on the 2 minute. I don't know, price action is not that good at this time, I will admit. Could you imagine if you took this one, though? If you took this one, you are an absolute baller. You would be an absolute baller. Do not recommend this to anyone, bro. Huh. Imagine. Yeah, I don't recommend that, guys. Don't do that. But, like, to be fair, you caught this trade, bro. This is like a, the, not even the algorithm itself could take this trade, bro. This is not a normal trade. I'm just looking at what's possible because this is really cool, right? This is an order block. This is a propulsion block. We had stacked sequential SMTs, and then a 15-second change in state. This is like, I don't know. This is like probably like, it'd be crazy if anyone took that. I don't know. It's just not realistic. I'm just looking at stuff. But yeah. So I guess the realistic way to take this is just that 1 minute change in state. Even that's not that realistic, guys. Okay, anyway. Let's just mark out the propulsion block and SMTs and just call it a day. Oh, yeah. That makes sense. Okay, anyway, I'm going to screenshot this here. Stacked SMTs with the propulsion block. That's kind of cool. So in the future, I'm going to be more thoughtful to, these propulsion blocks and looking for them. But still, pretty cool. Okay, guys, I think what I'm going to do now is I'm going to make the market recap, and then we'll move on. So, let's see how many people are watching. Bro, what? Yeah. We'll make the market recap, and then we should be good. Nice. Okay, there's 5 watching. Okay, guys, I'm going to end the stream here. I don't have a ton of time. Gotta film this. That's awesome, though. Proud of you, bro. Anyway, guys, I'll see you guys in the next one. Peace out.